Hello there, I am a 38-year-old Forex trader, and this is why you fail. I hope you're all doing well. I am happy and healthy. I'm trying to buy the yen. I'm not really succeeding. I do have a good Canadian dollar yen position open, which is currently around 1-to-3 risk reward ratio. I'm short Mexican peso yen. Overall though, it's proven quite difficult and I am in a double drawdown. I'm edging toward buying the Australian dollar. I think that will be my next sort of focus. My main bias is to buy the Australian dollar. You have inflation within target. You have GDP growth, which is positive PMI figures, retail sales, good steady unemployment rate. So I think potentially there's some upside for the Australian dollar. But you're not here to listen to that. You want to know why you are failing as a Forex trader, or why most people do fail in Forex trading. And there's so many reasons. I'm sure I could write a book about why people fail in Forex trading, but there is a common thread. There are common threads amongst 99% of failing traders. So let's go through that. Let me share my thoughts with you. The first reason, the main reason why most people fail, why they're not profitable in trading, whether that's stock trading, Forex trading, commodities trading, is simply they don't know what they're doing. And let me explain that. They have come across a brokerage platform, maybe even like a free demo trading app on their phone or tablet, and they jump right in and they don't know what they're doing. Maybe they've actually taken a step further than that and they've learnt the basics of technical analysis. They know what an engulfing candle is. They know how to read and identify a trend. But the reality is they just don't know what they're doing. They don't know enough. And when they fail, when they're not seeing the results that they want, they decide to take a greater in-depth look into technical analysis and try and learn about indicators or certain patterns. They try again and they fail again. And they continue that cycle. Okay, I need to learn even more about technical analysis. They learn a new indicator, a new pattern, a new setup, whatever it is, and continue to fail. But the reality is they just don't know what they're doing. It's as simple as that. They lack a profitable trading strategy, or perhaps they have no strategy at all. And trading a pin bar or kangaroo tail at support and resistance is not a trading strategy. I recently received an email from somebody who is looking for some trading funds. They want to trade on behalf of somebody else. They were hoping to trade for me. And they sent me like a PowerPoint presentation of their trading strategy. And the trading strategy was really identifying a trend, looking for a setup at a moving average, and that was it. The reality is that is not enough. I would not put my money with someone who's going to trade as simply as that. Trading is more complex than that. So this is really the first reason and the main reason why so many people fail, is they don't know what they're doing. They try and simplify trading. They try to make it far too easy, and it's not easy. You can't learn technical analysis in a week, apply that to the markets and see results. It's just not going to happen. Okay, so you need a trading edge. You need a strategy that is simple enough to follow, but not necessarily simple. It needs to be complex enough to put chance in your favor and for you to see results longer term, to see you succeed in your trading. Okay, so that's number one. What's number two? What's the second reason why so many people fail? Too many traders in the retail trading industry, I'd say 99% of traders in the retail industry are undercapitalized. What you need to understand is professional traders may be looking to make anywhere from 15 to 25% a year. Anything over 25% a year is considered a very good year. But these traders may be trading with $1 million, $10 million, a £5 million account. So making, say, 15 to 25% on that account is a significant return. You're talking about a lot of money. So even if you had a very small account of £1 million, $1 million, €1 million, if you return 25% a year, that's $250,000, pounds, euros you return in that year. 250,000. Not bad, is it? Retail traders, however, because they're so undercapitalized and they've got, say, a $2,000 account, a €2,000 account, pound account, Canadian dollar, Australian dollar, whatever, making 15 to 25% just doesn't seem worth it. Are you really going to slog your guts out for a year and trade every day for a year to return £400, 600 euros? So what many retail traders do is to try and make returns, say, of 100%, 200%, 500% return. Because they're so undercapitalized, they're having to really push their strategies and themselves to the max to get a decent monetary return. So what they're focusing on is the monetary gain rather than the percentage gain. They focus on the financial reward rather than the performance, the percentage performance. So many traders are undercapitalized. Now, I've given you two reasons, and there's more to come. A lack of a decent trading strategy, undercapitalized, but I'm not really giving you any solutions. So let's just rewind a bit. Number one is easier to solve. Get a decent trading strategy. Either create something yourself that incorporates technical analysis and fundamental analysis, something that makes sense to your mind, that you can see provides results over and over again, something you can back test, that you can live test. Create something significantly wonderful. Create something that's going to make a decent return, that you can look at the past performance and see a clear upside on the equity curve, on the performance curve. So that's number one. Create it yourself or learn from somebody else. But if you are going to learn from somebody else, make sure that that person is genuine, in what they do. So create or learn. Number two, if you're undercapitalized, there's only really two solutions to that. Number one is to get more money, is to save more, put more cash into your trading account. Obviously, don't risk more than you're willing to lose. If you put your life savings into a brokerage account, expect to lose your life savings. Okay, so don't put more in than you're willing to lose. So number one is to put more money in, and that could take a longer term view of perhaps putting more money into the account every quarter. A couple of times a year you top up the account. The second solution is you just be patient with yourself. If you've only got $5,000 to your name, or $5,000 you're willing to put into a brokerage account, then just think longer term. Where is this account going to be in 5-10 years? Because this trading game is a slow burner, and you'll make a lot of money long term, not short term. It's not get rich quick. So try and focus on the long term. You know, I've only got $5,000 now, but if I can trade, if I can make money every year, perhaps top up the account over time, in 10 years, I'm going to have a very significant account. And if you're thinking to yourself, well, I don't want to wait 10 years to have a decent trading account, then the reality is you're not going to make it as a trader. Okay, it's that simple. You have to have patience. You have to be realistic. So number one, number two. Number three, I keep looking down, so I've got a piece of paper here. Number three, too many traders risk far too much. Going back to being undercapitalized, perhaps they put too much money into an account in the sense of too much they're willing to risk. So they've put their whole life savings into an account. And what does that do? It makes them emotional as a trader. They're too attached to that money. So perhaps they put too much in an account. Perhaps they risk too much per trade. Perhaps they're with a broker that is a bit dodgy. And if you are with a scam broker, then you can say goodbye to your trading funds. You're not going to get them back, unfortunately. But risking too much is another common thread that exists among failing traders. You know, they're risking too much per trade, or their account is too big. It's over their sort of risk threshold, and it makes them emotional. If you are emotional as a trader, you're just going to end up losing money. You'll divert from your trading rules. You won't enjoy trading because these trading emotions that I'm talking about are not positive emotions. They're very negative emotions. You know, fear, frustration, discouragement. They're not very fun. And as you see your balance fall and you see losing trade after losing trade, you're diverting from your rules, those emotions just amplify. So too many losing traders are risking too much. If you lower your risk, you'll also lower the emotion. I'm in a drawdown at the moment. I seem to be in lots of drawdowns lately, and I do come out of them, and my equity curve moves higher. But I am in a bigger drawdown at the moment, trying to buy the yen. It's so frustrating. If I was risking too much, my slight frustration would be something so much more significant. And I could actually end up hating trading. I could feel it's all rigged against me, and I could become extremely discouraged, and I could potentially blow my account. So it's really important that risk is kept to a minimum. So even with the best trading account, even if you're not undercapitalized, if you're risking too much per trade or just risking money you're not willing to lose, then you're going to become emotional and you're not going to make it as a trader. So what's the solution? Lower your risk. Only have a brokerage account funded with what you're willing to lose. And when you take trades, risk the minimum. Now, so many people teach risk 1% per trade. That should be the max risk. I would say it's even lower than that. If you can risk 0.5% per trade, then do it. If you can risk 0.25% per trade, then do it. Once again, think long term. You know, this is a long term game. You're not going to get rich quick. I'm sorry if I'm bursting your bubble. Okay, what is number 4? Another reason, and the fourth reason why so many fail in this industry, is a lack of commitment or a lack of motivation, or both. And you may be thinking to yourself, well, I'm really committed. I've been trying to trade for 5 years now, and I'm reading books, I'm practicing on my demo, I'm blowing accounts, I'm this, I'm that. So perhaps point 4 is not about you, but there are many failing traders out there that have maybe taken a hit or two and feel discouraged and hurt. Perhaps they have some resentment and they're kind of giving up, or they just dabble in trading. Perhaps they're not hurt. Perhaps they just think Forex is a bit of a pipe dream. So they just kind of, like I said, dabble in it every now and then. In order to make it as a trader, you really have to be fully committed to this. You need to be trading every day. You need to create a schedule so you have time every day to at least analyze the markets, to study the markets, even if you're not trading them. You have to keep motivated. So you need to keep that dream in mind. You need to have goals. You need to expect more of yourself. So become more motivated, become more committed. What's the solution if you lack motivation? I don't know. I don't know how to motivate you. But what I will say is when I lack motivation, when I lack commitment, there's a few things I do. Number one is I have a short break. So sometimes just having a short break, moving away from the desk, even if it's just to have a break from trading for a day or two. Maybe if you got the money, go on holiday. That can really remotivate me, recharge me. Another thing I can do is to watch something that is motivational, read something that is motivational, learn about a trader that is successful, watch a movie that inspires you to grow your wealth, to achieve something that is extremely hard to achieve, like being successful in Forex. So there's this material that we can consume to motivate us. Affirmations work. So now and then I have these affirmations. I'm going to make it as a Forex trader. I'm going to be this. I'm going to make X amount this year. So those affirmations can help us to reignite that desire to trade. So 4 reasons why most people fail. If you resonate with any of those reasons or multiple of those reasons, then let me know below. I'm enjoying these videos, like these sort of diary style videos, me talking to the camera. They seem to be being received well. If you want to see more of these videos, the likes are appreciated, the comments are appreciated. The more interaction I have with a video, the more chance that I'll create something like it in the future. If you have suggestions of what you would like me to talk about in future videos, then leave that below and I'll do my best to make that. Thank you so much for watching, and I'll speak to you in another video.